I do think that Bitcoin will challenge and surpass the all-time high of $20,000.
Okay, that's a lot.
I'm not going to prove this to anyone. I don't like to do that. I just want the truth to be out there.
Oh, that's bold.
I also don't trust the crypto exchanges, so I trust only myself in holding my Bitcoin.
At what price did you buy your first Bitcoin?
So I remember buying my Bitcoins, I'm so smart, and then it fell from 250 down to 50 bucks in a matter of a week. I don't know how that is going to end, how high Bitcoin is going to go, how low Bitcoin is going to go. Only Bitcoin.
Hey guys, this is Catherine Ross. We're here in Las Vegas with Tony Vays. Nice to meet you, Tony. Thanks for joining us. So if you could describe yourself in one sentence, what would you tell to people?
Oh, wow. I am a content creator in the crypto blockchain space and a trader.
Okay, that's a lot. So what comes first, content creator?
Content creator now comes first because I feel that education is really, really important. And I try to cover all sides of it on my YouTube channel. We cover the tech side of crypto, focused on Bitcoin. I've now added a law show where I'm on a YouTube podcast with about 4 or 5 lawyers in the crypto space. I try to interview people, and also since my expertise has been 10 years on Wall Street and lots of experience trading, I'm too busy traveling the world, speaking at conferences, and just even doing interviews like this. And so now I don't really have much time to trade myself. So I educate people on how to be traders. It's something that a lot of people are doing in the crypto space, and it's a very dangerous profession. You can lose a lot of money. So I teach workshops teaching people how to do it properly and safely.
When did you join this whole crypto craze?
So it was a slow transition. I first heard about Bitcoin around 2011 when it was starting to be used for donations for WikiLeaks. I thought it was cool, I didn't look into it. In 2012, I heard about it some more. I Googled it, and all I saw was mining, the concept of mining Bitcoin. But I was busy working my Wall Street job, 10-hour work days, plus commuting. So I didn't have time for that. In 2013, I Googled it again due to the Cyprus incident where the bank accounts were frozen, money was confiscated by the state. And I basically said, hey, this is ridiculous. I have a bunch of money saved. I work hard for my money. Where do I put my money that it's not at risk of confiscation? And that's when it hit me that Bitcoin is an unconfiscatable asset for the first time in human history, if you know how to properly buy it and how to properly hold it and protect it. 2013 got me out, bought my first Bitcoins, and then I really fell into that rabbit hole, as Andreas likes to say. And in 2014, I spoke at my first conference. Cointelegraph saw me at that conference, my very first panel speaking. They asked me to write for them. I started writing articles in Cointelegraph about economics and trading. That eventually led me to be interviewed on YouTube channels. There was enough demand, started my own YouTube channel, and speaking at bigger venues as I go around the world, and it's great.
At what price did you buy your first Bitcoin?
So I was buying my first Bitcoins on that Cyprus bubble.
In 2013,
in the first quarter of 2013. So it was that bubble where the price of Bitcoin went up from like $100 up to 250 bucks.
Bubble.
That was the first 2013 bubble. So I remember buying my Bitcoins, I'm so smart, and then it fell from 250 down to 50 bucks in a matter of a week, and I was sitting on a nice losing position. There goes your professional trader, buying into the FOMO. I held on to those. And I was able to ride the late 2013 bubble. However, the 2014, 2015 bear market was bad. I was writing in Cointelegraph at the time about the bear market. People used to hate me back then like they hate me today because I'm predicting lower prices for Bitcoin going into the rest of the year. We'll probably talk about that.
Do you do
after.
technical analysis or
I do. I have 15 years experience with technical analysis. That is my #1 form of trading, and that's what I teach to people. But people didn't like me back then in those articles. I was calling for a $110 ultimate bottom in Bitcoin on that bear market of 2014. We went down to 150. I feel that I came pretty close to hitting that target. The problem happened after that. After that, the Bitcoin did nothing. For 9 months, The first 9 months of 2015, Bitcoin traded between $200 and $250. And that's when I've made most of my mistakes with Bitcoin, because it wasn't moving and it wasn't like volatile enough to trade. I decided to invest a lot of my Bitcoin into companies in the Bitcoin space that I thought were going to be very, very good for the ecosystem. And that's how I ended up losing a lot of my Bitcoin.
Can you name some of those?
I don't like to do that because there might still be legal cases involved with that. But that was my first experience in being a VC, and I can promise you that is also my last experience of being a VC.
I was going to ask that. So the last, I see. So you've talked a lot about Ripple. And I saw a lot of tweets where you call Ripple a scam, but it's a well-established company that has been for a while and that has been doing pretty great. You know, they have been doing a great job and also donating. Why do you feel so negative about Ripple?
Sure, because I think it's not that the Ripple company is bad. It's just that I fully understand how a blockchain works and what a blockchain does. And there's no doubt in my mind that the Ripple token is totally unnecessary and totally useless for any of their products. And because I know that the Ripple token itself is totally useless and it's not even a blockchain, the only logical conclusion here is that Ripple is a security. Now, right now, they're going through a court case where they're being challenged in, not by the SEC that they're a security, they're being challenged by some guy that lost a couple of $100 investing in Ripple. And I think that's very unfortunate because I don't think there's enough motivation there to bring a real case. Now, to me, Ripple simply printed 100 billion tokens for no other reason than to print money for themselves. And they've now, because they are now so rich of the valuation of these tokens, they are able to hire the the former director of the SEC, Mary Jo White, to defend them in court that they're not a security. They're able to hire speakers like Bill Clinton. When you print your own money, you can really afford a lot of things. And I find that very unfortunate. So to me, Ripple is, in my opinion, and my, again, 10 to 15 years experience, not only and my 5 years experience with blockchains, plus Wall Street, in my opinion, it's just they either printed money for themselves or they printed their own security or the combination of the two. And I don't like that. If Ripple simply removed that token, you can't put the genie back in the bottle. If Ripple never created that token, I would not be as critical. So to me, the Ripple token is the scam. What they're trying to do is create a database to help banks move their data and move their transactions. And that's perfectly fine. But you do not need a volatile currency in the middle of that transaction. And I think it's very disappointing that people that work at Ripple continue to promote this Ripple token.
So what do you suggest they do right now? They are in top 5 cryptocurrencies right now. I mean, ranked by CoinMarketCap. And you call them useless. So what do you suggest they do? They just get rid of all the tokens? Or because it obviously very popular because people still trade that, judging by the CoinMarketCap data.
There's not much they can do. Now, if the SEC comes down and calls them a security, I don't know how that is going to end. The only way they can actually get out of this, in my opinion, is if they actually build a product that is profitable, not profit from the speculation of the Ripple token, but actually build a product that doesn't rely on the token. And they're profitable enough where they can actually go public legitimately on the stock market. And then maybe they can convince the SEC to allow them to convert these Ripple tokens to be legitimate securities, to be legitimate stock of the Ripple company, and somehow convert the Ripple token holders into the equity holders of the Ripple company stock. Now, that might be difficult because there are probably 13-year-olds that are holding and speculating on this token, so it might be a little hard to convince the SEC that the 13-year-old that has $1 million worth of Ripple token somehow deserves to be a shareholder of the company of Ripple. So I don't know how it's going to end, but I think that it's just like once you go down a bad path, Either you got to be rich enough to convince the government to make what you're doing legal, or they're going to come down on you hard. They seem to be on that borderline. The Ripple people are already advising the IMF. They're potentially could be speaking in front of Congress. So they're kind of buying their way into the influence position of the regulators, law enforcement, and even policymakers, because they were able to print themselves $80 billion.
So you don't think they've been doing just a great job, and well, and that's why they're so popular, and they have Bill Clinton for their conference, so you just think they're buying their way out?
Of course. I mean, we can look at one of their competitors, which is R3. R3 is doing exactly the same thing that Ripple is doing, but they do not have a token. Now, I am borderline critical of R3 because I don't think what they're doing is going to actually succeed, but at least they didn't have a token, so I can't actually call them a scam or a fraud because they did not print their own uncompliant security or their own money. So I'm not critical for them in that respect. But something like Ripple has 1,000 times more resources because they printed 100 billion Ripple tokens for themselves, and they still retain 66% of those tokens, and they sell them whenever they like, and they continue to finance their operation. And their competitors that decided to do things a more legitimate way don't have $10 billion in capital. So yeah, and I find that to be very bad, and the regulators don't seem to be doing anything about it. I think that we don't need new laws. We don't need new regulation. They just need to enforce the regulation we've had for a long time that is there for this kind of stuff, creating uncompliant securities, solicitation of money from the general public. I think the laws and regulations in that space are perfectly fine. They just need to be applied to the crypto space the same way.
In what country? You said they're fine. In what country? In the US?
In the US. In the US. I consider the US to be the leader. People always complain about the US regulations, but at the end of the day, the United States financial markets are the most sought after markets. They're the most regulated, they're the most secure, and they're the most trusted. There is a reason why companies want to go public on the New York Stock Exchange over other parts of the world, because they trust that legal system. They trust it. I mean, if you look, you can go public on the Russian exchange, you can go public on the Indian exchange, go ahead and do it, but most people don't want to do that. They want the security of the US legal system. So most companies, as much as people complain about the US being over-regulated, most companies would rather go public on the US exchange.
But don't you think there might be some place for complaints, because we're talking about new type of digital assets here, and they're still regulated by 1913 year law, as much as I remember?
I don't think there's anything new here. The only innovation that I have seen from Ethereum and everything that's built on top of Ethereum, the only thing that's new is the ability to easy funnel money from unqualified investors into your project. And I don't see that as being advantageous to anyone. It's almost like, yeah, sure, you only make $20,000 a year because you're a janitor, you can buy a $700,000 house. It sounds great when you buy it. It doesn't end very well, as we saw in the 2008 financial crisis. I mean, I was working at Bear Stearns. Our whole company went down. 150,000 people lost their jobs in that company. Some of them transitioned to JP Morgan because they kind of took over. But like at least half that company lost their jobs. People in the banks, Countrywide, Wachovia, some of the biggest banks, they went under. Do you think those people wanted to lose their jobs? Of course not, right? But what happens is when the bank next door to you starts giving away these mortgages and people are going to their banks, you can either go out of business now or join this FOMO of everybody buying a house, and then it ends badly. No one forced the people to buy that house. But at the end of the day, the people blame the banks instead of themselves for buying an overpriced house.
So you think it's people's responsibility in the first place?
I think it's people's responsibility, but when you have laws in place to prevent people from buying. I mean, if people would have better luck buying lottery tickets than they would investing in these ICOs. Investing in ICOs, you're really investing in things you know nothing about. You don't understand these companies. You're not following what's going on the back end. It's a VC job. It's the job of the VCs to collect money from qualified investors that have a lot of money and then spend their entire day researching speculative companies to invest your money to provide better returns. And the VCs barely beat the S&P 500 returns. Only the very good ones do. On average, they don't. So what chance does the average person that has a day job have? They have no resources to actually understand what is happening with these companies on the back end. And I think investing in these ICOs is like investing in penny stocks in the 90s.
You mentioned ICOs only, but what about the cryptocurrencies that have been in place for a while?
Sure. So I break cryptocurrencies down into 4 types. We have Bitcoin, which is the one that started it all. I find Bitcoin to be very decentralized. No one can change the economic model of Bitcoin. Then we have Bitcoin copycats. I'll give 2 examples, Monero and Litecoin. They were started the same way as Bitcoin, very fairly. No one created money for themselves. And it was fairly, but they are like a copy of Bitcoin that is not as decentralized, not as secure, and they're a little more centralized, and they're just behind the ball. But they're at least legitimate. I think they're terrible investments, but at least I don't find them to be fraudulent. The next tier is also proof-of-work coins, but these have had an advantage where you're actually printing money for yourself, talking about how good it is. These are like Zcash and Dash, for example. Dash had an Instamine where the creator of Dash and a couple of friends created 20% of the total Dash that will ever exist for themselves in the first day of the currency's existence, and then they kind of talked about what a great thing that is because now they can pay for development. Zcash takes 20% of all new mined Zcash. So it's a project pretending to be a currency, pretending to be decentralized for the sole purpose of founders and investors to print money for themselves. So I don't like those coins at all. Then we move on to the proof-of-stake coins and all the ICOs and Ethereum and everything built on Ethereum and Ethereum's competitors. I find these to be straight-up companies that issued an non-compliant security for the sole purpose of printing money for themselves, pretending to be a utility token. In reality, utility tokens don't exist, or they're not really useful at all. To me, paying the currency of Ethereum for a smart contract is kind of like Amazon charging you Amazon stock to buy goods from Amazon. If Ethereum builds a platform for smart contracts, someone will copy that code, put it out there, and charge people in the currency of their choice and maintain those smart contracts for them. I think Ethereum is just as centralized. I think Ethereum, a centralized version of Ethereum would be a lot more efficient and doesn't require your own currency, almost like forcing people to speak your own language your language that you created for yourself in order to do business with you. I think the economics will interrupt you here.
Sorry. You said that they're pretending to be a utility token, right? But Joseph Lubin recently said that judging by the latest SEC decision on the Ethereum network, that it is, in fact, it is a utility token. So it might be a decision by the regulators. Why do you think they're pretending to be utility tokens?
Okay, so again, that is more of my opinion. Now, Joseph Lubin is a co-founder of Ethereum, so he may have some inside information that I don't. The SEC has not said, here the real information is the SEC has not said anything about Ethereum yet. It was one guy that works at the SEC that actually has nothing to do with the department that is researching cryptocurrencies. It was one guy's opinion, and I would be surprised if he didn't get in a lot of trouble with the SEC for saying that. Once again, when you have a centralized corporation like Ethereum that printed their own token, just like Ripple, the people at the top of the food chain of Ethereum are probably billionaires by printing their own unqualified security. They now have a lot of money and a lot of resources to throw lobbyists at the regulators, throw lobbyists at at the policymakers in order to convince them that Ethereum is not an unlicensed security. They may be able to achieve their goal of convincing the government and the regulators that Ethereum is not a non-compliant security, that it's legit and it's a legitimate utility token. If those regulators, if the SEC, if the Congress bring in some actual qualified blockchain developers, like core developers. I don't know if I would be willing to speak. I probably am not qualified enough, but I can certainly suggest qualified people. And if the SEC would consult with those people, I'm hoping they would do a good job explaining to the SEC why Ethereum token is not a legitimate utility token, why it is an unlicensed, unregistered security. And so it really depends on who the SEC is going to listen to for their advice. And Ethereum can throw way more money at helping them to benefit themselves than people like myself that travel around the world trying to convince people without me having $1 billion for this, because I have no, I just want the truth to be out there. So we will see what the SEC eventually says. But the SEC has not officially said anything, and thinking that they have, I think, is kind of dangerous for a dangerous assumption.
I have a couple of questions about trading. So you've mentioned that you're right now pretty busy to actually trade, right? So you don't trade at all right now?
I trade in my 401k on the traditional markets, and I have very specific strategies involving option trades around earnings season. So I make about 8 trades a year. I made 2 trades this quarter. I'm not going to prove this to anyone, but I made 2 trades this quarter, and I made about 8% on my entire portfolio in those 2 trades. I made 1 trade in January, and that was a good trade as well. And so I trade very minimally with strategies that were developed years ago. I also don't trust the crypto exchanges. I'm the only one that holds on to my private keys. I do not hold crypto, I do not let my crypto being held by someone else. If you have your crypto on an exchange, if you have your crypto at a Bitcoin bank like Coinbase, you are actually not in control of your crypto. Some centralized companies in control of your crypto. They can be hacked internally, externally. The government, any government can come down and confiscate that Bitcoin. So I trust only myself in holding my Bitcoin. That's another reason why I don't trade in crypto. If we do get the Bitcoin ETF, which I don't believe we're going to get anytime soon,
why?
I think there's a lot of big regulatory hurdle to get the ETF. But if the ETF does come, I would be more interested in trading the Bitcoin ETF than actual Bitcoin, because then I do not put my Bitcoin at risk with unregistered exchanges and exchanges that may be fraudulent, and we don't know if they are fraudulent until they are.
I see. Does your portfolio contain any cryptocurrencies?
Only Bitcoin.
Only Bitcoin.
There could be some Litecoin sitting around at an old hard drive, but my crypto portfolio is only Bitcoin.
My last question for today is, what do you think will happen to the Bitcoin price when we mine 21 million Bitcoins?
Well, technically, you're never going to mine 21 million Bitcoins.
Why?
So because it's a half-life. So you're always going down by half. So if you think about it another way, Bitcoin halves every 4 years. So as long as Bitcoin only doubles in price every 4 years, each mining block is making you the same amount of money, right? So in 20 years, if we're only mining a quarter of a Bitcoin, but 1 Bitcoin is worth $1 million, that quarter of a Bitcoin is $250,000 every 10 minutes entering the global economy. So I think it'll take, and Bitcoin is still going up. So I don't really worry about that for the foreseeable future.
But it is pretty volatile right now, right?
It's still pretty volatile, but the more money 1 Bitcoin is worth, the less volatile your small transactions are. Now, I understand that Bitcoin technology is not mature enough yet for you to buy that cup of coffee. But Lightning is coming, give it another year, maybe 2, and you will be able to easily buy that cup of coffee with Bitcoin. Now, when 1 Bitcoin is $1,000, and it can move, 100% in a day from 1,000 to 2,000, sure, that cup of coffee may fluctuate in value. But when one Bitcoin is upwards of $100,000, no matter how much it moves in one day, your $5 coffee purchase will only fluctuate by a difference of a penny because it's a small purchase. So basically, the more value there is on chain, the more value there is on the Bitcoin blockchain, the less volatile your small purchases are. And then it moves on to medium purchases and large purchases and scales up from there. So, and my final note on the 21 million Bitcoin being mined, in the future, there should be enough little transaction fees to maintain the system. The other thing I always tell people is if Bitcoin makes it that far, if Bitcoin makes it to the year 2030, and everyone around the world is using Bitcoin, and business models like Amazon and Netflix are so dependent on Bitcoin as a currency, I think it becomes a business expense for them to run a couple of miners in order to make sure that Bitcoin stays decentralized and continues to work, even if they're mining at a loss, because their business takes a bigger hit if Bitcoin takes a hit. If you as a business are making an extra $1 billion a year because of the existence of Bitcoin, you should be willing to spend $200 million mining at a loss in order to keep the additional 800 million because Bitcoin does that for your business.
But do you have any specific number of the Bitcoin price?
It's going to be a lot higher. I do think that Bitcoin will challenge and surpass the all-time high of $20,000 by the next halving. The next halving is in May of 2020. I know it's a little distance away, but
just 2 years.
Just 2 years, right. But in Bitcoin world, it's a lot. I'm expecting Bitcoin price to continue to slowly go down throughout the rest of the year. We might finally bottom out towards the end of the year, but I do think that there is some more pain left in this bear market. And it's hard for me to predict bullish targets, targets to the upside, because I'm still predicting targets to the downside. Once I finally admit that the bottom of the price is in, then on all these interviews, I'll only talk about how high Bitcoin is going to go. But for the last 6 months, I've only been talking about how low Bitcoin is going to go.
Okay. Then I'm sure we'll meet again, and you'll tell us all about how much Bitcoin is going up.
Absolutely.
Thank you so much.
Thank you
for your time.
Cointelegraph. Like, subscribe, and hodl.